start the recording. Good morning officially, Market Watch Group, and welcome to the Sunday Market Insights. My name is Scott. I'll be your host. Beautiful weather across the country, apparently. It's sunny from Utah to Rhode Island and everywhere in between. I don't know. I'm just assuming. Tell me if I'm wrong. As always, keep in mind what we do is for education and illustrative purposes only. Nothing should be intended or construed as a recommendation to buy or sell any security or financial product. Any decisions made should be done at your own risk. We're not brokers. We're not advisors. We're just a group of best friends coming to meet and discuss all things market related. What's our agenda today? Let's posture this market, of course. What's changing, what's strengthening, what's starting to ebb, what's flowing. All that good stuff. Let's talk about the economic calendar. It is first week of the month, which means it's employment data. I bet by now you're starting to see all the patterns of employment, right? I remember when it seemed more mysterious, the economic cycle of data. And the more you watch it, the more you're just like, oh yeah, I've got this weekly, I've got this once a month, I've got this coming in here, this comes, and it's just a constant stream of like what's going on. Ooh, Goolsby is on Thursday evening. The hallowed, the revered, Sir Dr. Austin Goolsby. I don't know if he's a doctor. I don't know if he's been knighted, but I like to call him Sir Dr. Austin Goolsby. Fall in Utah. If you've never had fall, I'm sure back east it's okay. Man, when we get the canyons with the leaves changing and the weather's just this crisp fall air, still hot in the day, but it starts getting nice and cool at night. And you know football's on TV because of the weather, and you're like, yes, fall is here. Trading plan section of the week. We are starting the loop. If you're new, if you're newish, if you've been here for months or years, doesn't matter. Join us for the next round on the trading plan loop. Better and better and better. That's the objective. Let's go. Trump's trade war just got more chaotic than ever. Well, that's exciting. That's exciting. We haven't seen the worst of it. Retailers warn of more tariff impact. Cash poor homeowners are tapping their equity to cut their debts. So you're just shifting, really, because you're just shifting home debt to consumer debt, though home debt tends to have a lower interest rate. So I mean, it's not a terrible idea. Of course, you would rather not tap into the equity you've been earning. August jobs report, we talked about that. Trump lashes out after appeals court rejects his tariffs. It looks like that's heading to the Supreme Court. We'll see what that looks like. What else? U.S. still working on trade deals. Okay. Tame U.S. job growth expected in approach to Fed meeting. What it could mean for the Fed to lose its independence, yada, yada. Okay. Well, all right, let's go. Let's look at what we have. I have my posture log here. I projected that I would raise... I said I thought it would stay the same or go up 1/4 point. Steven, I saw you posted, but I didn't see the post. Did you go up a quarter of a point? Half a point? Did you stay the same? Did you drop? Anybody who's doing their analysis preemptively to this meeting, I'd love to know your numbers prior, but anyway, let's get to it. Long-term trend stayed the same. Okay, fair. Long-term trend ended up with a 5. I mean, we're in an okay place. I don't want to see people change the date. Oh, you're right. I copied and pasted it, but I did not change the date. Can you guys believe it's the end of August? That is insane to me. I feel like this year has just flown by. 1.25 is what we're coming into. And I mean, it's just grinding along. It looks great. It's at a new high. So let's just kind of see this thing. So we started here around, let's call it 610, and we're at 645, 35 points above. 35 out of 645 is what, about 5.5%? .4%. That's what the market is up since the new administration took over. Not from the beginning of the year. A little bit more from the beginning of the year. Not by much, but a little bit more. Up 5.5%. Okay. We've been grinding along overbought for a little while here, and the trend looks good. Interesting. Interesting, John says. September's been my worst month for trading calls in previous years. September tends to be a difficult month, with it bottoming in October, and then October, November, December being market rallies. I'm going to see if I have... Sandy, do you have... Where is... Sorry, let me just see if I can't seem to get any files to show up here. What is going on today? My mouse is having crazy reactions. Okay, I'm going to move you. I'm looking for the cyclical chart. The cyclical chart of the market. Downloads. There is a picture. It's posted in Circle. Where is it? Someone grab it and post it here so I can grab it and show it. That's the task. Somebody find me that. Find me that picture. Trading chat a couple weeks ago. Sandy, do you know the one I mean? The 20-year composite of the markets. If you have that, I want to show that. It's starting to become more prevalent to what's going on. Anyways, all right. I don't have time to go find it myself because I'll just meander around. Oh, Sandy, of course you found it. Bam, that fast. Just that fast. Just that easy. So let's talk about it. Why does John say, well, I don't know, September's not a great month for me. Yeah, fair. Fair. You can kind of see why we say sell in May and go away, because May tends to do this. May, June, July. And then we can sometimes get a bump in September followed by a bigger drop. And it drops all the way into the beginning of October. But then from October, we find this little beauty. And you start to think, well, wait a second. It seems like most of our action comes from February, March, and April, October, November, December. With January a little bit lackluster. September lackluster. May, June, July, August kind of sideways. Now, the problem with this is we've been moving up. This whole chunk has been out of the cycle. But you never know when it's going to kick back in, right? We never know when it's going to kick back in. And so, yeah. What are we expecting from this? I think we could see let me see if I can bring this down. Let's get this back here. Okay, so first and foremost, my score for the long-term trend is unchanged. I'm staying at 1.25. So let's go start looking at the shorter one. Let's go to 6 months. Okay, now. So we have March. And you can see that March, starting here, so March tends to go sideways and up. And our March went down. And our April tested the lows. And then coming out of it, by the end of April, we popped up. And so now, when you look at this, when you say, hey, sell in May, go away. No, May is like literally when we broke out and started moving bullishly. We've been on a bullish trend from May until now. Where normally May until now is quite sideways. So, yeah, tariffs definitely caused the exception. But we've been doing this. And we did kind of have a drop. When we were in March, we dropped down, and then we dropped further, then we came back, and it looked kind of like this. So yeah, it's off cycle for sure. But at any given time, we're thinking maybe we start to see this thing settle back into what we're used to. Thank you for sharing that with me, Sandy and Steven. Tariffs are causing a lot of exceptions as we all try to figure out just what the hell is going on. Okay. What else? Short term. Trend is exactly in line with what we've been seeing. I'm going to draw these lines straight. So this is one line here. And this is one line here. Where are we now? We're still in it. It seems like it could be slowing down a little bit here. It seems like it could be slowing down in this last. I'm actually going to draw these different. And I might actually call an audible here as I see what's going on. And I might say, you know what? Even though we've stayed inside that broader range of red, oh, look at Bob's. Bob's chart is nice. Bob's chart is nice. Look at that beauty. What is that, 4 years at a clip? Yeah. Okay. 11 years sideways during some stagflationary times. Then we got a bull market. Then we had And then we had the tech bubble and what came after that. Very interesting. Very interesting chart. Love it. Love it. Okay. Yeah, thank you for sharing. I'm as I look at this and I look at what's starting to happen here, I gotta tell you guys, I'm a little bit leaning towards taking a quarter of a point away as we have failed to get back to those highs. The short-term trend in this last little bit is feeling like it's having a hard time keeping up with that red line I have drawn. Let me know your thoughts. Yeah. I think I'm going to actually take this down to 1.25. If it can accelerate, I'll give it back. I'm gonna drop mine a little bit here and just sort of say, hey, it's not weakness. Remember that the score is just showing less strength, right? I don't want to misconstrue those two things, but it definitely seems like a little bit less to me. John Z agrees. John Welsh agrees. If I have both Johns in my favor, we move forward. It's that simple. That's what we're doing. All right, let's talk about volume. Let's talk about volume. Oh no, I think I just lost my connection. I just don't understand how that happens. You guys ever have that? It's like locked me up now. Thinkorswim on Sundays can be a bit of a pain. A bit of a pain in the butt. Let me shut her down and start it back up. Because I check it and I'm like, oh yeah, everything's working. We even changed the time frame and then all of a sudden it just locks up. Okay. That's fine. We've got 2 parts scored. We'll get volume done next. But let me go ahead and jump to major market. Yeah, they do tend to do a lot of maintenance on the weekends. It's very inconsiderate. Do it at night. Do it at night. Okay. Okay, let me make sure this is refreshed and all the way to the side. And let's do some sector rotation. Let's see. Okay. Okay. Whose night? John said, right? That's true. That's true. I mean, I guess mine, because why not? John Welsh calling me a selfish bastard, apparently. Like, it's not all about you, Scott, but it feels like it should be. I don't know. Okay. Okay, that's fair. That's fair. What's going on? Communication services at the top, technology second. We like that. Utilities third. It's explainable. Then we have industrials. Then we have discretionary. That makes sense. And don't I have financials? Yeah, financials is in the mix. Oh, financials is up there. I didn't even notice it popped up popped up into the upper quadrant there, trying to move into a leading position. We'd love to see a third. That looks pretty good so far. Sorry, I believe we're already at a 1.75 or at a 0.75 on this. It's going to be real difficult for it to... No, that's not what I wanted to do. They tricked me with their ad. 133. Who's on top? Industrials. Industrials. Followed by technology. Utilities is there. Communication services is there. We've got financials moving into position. Discretionary holding up. Staples pulling back. Oh, I sure did, Bob. I didn't even recognize that I thought I went in order. That's my fault. I didn't change the order. I went by order of tabs. I don't know how my tabs got shifted. I just sort of go forward. Sorry, guys. Sorry. That's on me. I accept that. I'm keeping you guys on your toes. That was intentional. It wasn't. 66. We'll take a step, but we're just changing the order just for fun, just to get different perspective. Maybe our scores will be different if we mix it up. Technology still leading. Energy. I gotta tell you. It makes more sense now because I'm looking at this thinking, how am I at a 0.75? I'm not. I'm at a 0.25. I'm at a 0.25, and technology is the only one. Now, technology can carry us at a 0.25. I've said that. Who's joining? Energy? That's not great. It's not great. It's not enough for me to make a shift. So I'm not... oh my gosh, what am I doing today, you guys? I'm not saying that I'm like, oh, it's looking weaker. I'm saying the 0.25 looks like it's going to hold, but no one seems to be clamoring up to join. Am I wrong? We're certainly missing any new sectors trying to get up in there. Communication services just sort of stopped. They don't want to get into that leading position. I'm going to leave it at a 0.25. I don't love seeing energy shooting up into the top. And I noticed that this is sort of turned a bit sideways, but overall, still the leader. I'm going to leave it at a 0.25. Now I'm going to work my way backwards to a major market. We're going to get it all done. Tech looking up. Tech is up but looking down, while energy is looking aggressively up. Does that matter? Yeah. I mean, you know, when we see energy moving up, it's a little bit more of a slow process to see it really take shape, because we see energy costs moving up as inflationary pressures. And certainly we're not excited about any extra inflationary pressures from what we already have. And so I would say it matters in that we're looking to see if and when anything follows suit. But for now, I'm going to leave my score the same, because what I see is we still have, although I did not go, where's press to keep me honest? I did not go to the 22. Let's go see what happens here. So on the 22, we have discretionary at the top, but dropping. Healthcare at the top and rising. Materials near the top. Communication services kind of sideways. There's the energy move right there. You can see it doesn't look as bad there. This is financials. Then down here, you've got technology, industrials, staples, utilities. Kind of a mixed bag. I'm not seeing much in here. If it was very confusing, I would end up at a 0 and just be like, yeah, we'll just call it a wash. Overall, I still see enough lead remaining from technology to let it have that 1/4 of a point, but nothing more than that. We'll see if whatever's going on here in this noise starts to take shape on the 66 day, and that will adapt our score. Okay, stays the same for me. I'm a 0.25. Let me know if you are different, the same. A couple people said already they agree. Okay, let's go into major market. NASDAQ on top, staying strong, followed by the S&P, followed by the Dow, followed by the small caps in their lagging position. We drop down to 133. And we see what? Still NASDAQ on top. Still S&P showing the watermark. But what we've seen is we've seen a shift in small caps from a lagging last position to a third position. They've moved ahead of the Dow. Okay, that's good. Ahead of the Dow, but still sort of not quite a leading position. Okay, let's go down to 66 days. Okay, on 66, the small caps. So it's very interesting, right? In this situation, this is my read on it. I want to hear from you guys. This tends to be more about hope than about what's actually happening. So when you look at sector rotation, that's what's actually happening. The market is moving the money around, and it's there's no clear bullish alignment. More bullish than anything else, but we're not seeing 3, 4, even close growth sectors leading. But here, all of a sudden, we see small caps. And in the last week, they popped up here into a leading position on this chart. Is that enough for me to take my score to a 1? Not even close. I need to have multiple time frames showing me, not just this one for the last week. I've already given it some credit for moving into a leading position at all. And so I'm at a 0.75. But is this enough for me to be like, it's a 1? Everybody loves. No, I think what this is showing is a lot of pricing in the Fed. Saying, oh, it looks like the Fed between the job weakness, though the inflation still is saying they probably shouldn't. But between the job weakness and the shift that we are perceiving in the Fed's independence, do we agree the Fed is losing independence? I want to hear if everyone thinks, yeah, they seem to be losing independence. There seems to be enough political pressure. Unfortunately, yes. Right? It does seem so. It does seem so. I feel like there'd be more pushback too. Just simply from thinking, you know what? Whatever we're seeing, would we want to see if you're on the side doing it, would you want it to be done? would you be thinking to yourself, well, the next administration that's not my party, would I want them to just be like, yeah, I'm going to pick all my people to implement? I feel like we're losing what impartiality there seems to be in certain institutions, like courts and feds. The Fed has always had political pressure just to shift in direction. I don't know. I mean, I remember, during the Biden administration when a lot of people were like, there's no way we're going to have a soft landing. No way. And I feel like the Fed, I mean, look, we all agree the Fed was a little behind the curve when they first raised the rates. But what they did to catch up and put America into a position of the soft landing, I kind of feel like that was very apolitical. They just did a good job. They did a great job in the pandemic, which was the previous administration. Right? I mean, they really came hard during the pandemic. Then they missed a little right at the transition, but then they got back in place. I have to say, if I look back, and look at the job done, we definitely had a recession. 2022, clearly a recession. 2 quarters, yeah. Bear market. I think it's explainable. I don't think, the Biden policies led to a recession. It was a recession. Recession's 2 negative output quarters. I mean, it is what it is. But a great recovery. And a soft landing. So, I don't know. Fed needs to be independent. Yeah. If you go look at like non-independent central banks and the results that come from that, I don't think you'll like the results. So, anyways, okay. We'll see what happens. We'll definitely see. Okay. 66 days, and now let's go down to 22 days. And more of the same, though interestingly, the Russell had a huge move up. Second place was the Dow, with the S&P and the NASDAQ lagging behind. So let's talk about it then. So for me, my major market is going to stay at a 0.75. I'm recognizing the strength of the Russell and the maintenance of strength in the NASDAQ. I don't see any defensiveness. If they gave back some for sure on Friday, not a ton. They gave back some. But overall, this is incorporating Friday right here. So they did give back some. It's definitely an oligarchy for sure. Yeah, I think this is going to stay at a 0.75. I think this is going to stay at a 0.25. Nothing changes for me inside of these scores. Now, when I talked about my score possibly going up to a 5.75, I thought maybe there's something in the sectors, but there's not. And how am I a 4? I don't understand. Sorry. I have an extra decimal. There we go. Okay. Let's go to the VIX. Let's go. We got to do volume 2. Sorry, I forgot that we missed one. charts. Boom, boom. Let's get these things organized. Let's get this set over here to SPY. Okay. Volume. Volume first. Let me get rid of the extra time I have. And, ooh, we did. I didn't think we would, but we did. We lost 0.6%, which is enough. Our threshold is 0.5. We were at 0.6, so there's a decent amount of shadow here. And if you look, that shadow came literally in the last 5 minutes. Bam, a huge move. But even with that, in the last 5 minutes, this was a down day on above average volume. Which means what? Which means we need one of these. And we need this. Oh, I lost it. Oh, there it is. Never mind. Boom. Sell day. So what am I going to do? I'm going to throw out these guys. We lose the tie. We lose the sell. And what do we have now? Just these three, which is a 1, 1, and 1. One tie, one sell, one buy, one tie equals a 0.25. So it stays the same. Now, here's what's interesting. We start here, we end here, and my line is ever so slightly trending up. Interestingly, except for these 3 days and these 2 days, most of the action exists below that line, but the slope is the slope. The score is the score. I'm giving it wrong start on the line. How so? Are you trying to draw from the bottom of this line, of this day? That's the start. Remember, on a red candle, the open of that day is the top. And the bottom of that day is where it closed. So I start my line. If it's a white candle, I start from the bottom of the candle because that's the open. I'm going from open to close. That is the open of this period. That is the close of this period. Open to close. So it was a sell day, but my line starts at the open of that day. Open to close so that I get the entire period. You're not getting that day. You're only getting the end of that day. So not a huge distinction. And in fact, if you notice, 1, 2, 3, 4, 5. The next start will be here. So the next start will actually be a little lower. Next week when we do this, we'll actually start from an easier point than we are now. So it'll be easier for this to maintain itself because we'll get rid of this little chunk over here, right? So now I feel okay with it. It's still a 0.25. It's still an upslope. It's just not very much of an upslope. Okay. So 0.25. Significant difference gradient wise. Yeah. Understood. Okay. Lastly, but not leastly, the VIX. I thought we'd have time for covered calls, but apparently I'm going slow here. So let me see. All right, let's go. Let me get the VIX score up here. Same score for me. We technically established a lower low, but realistically we sort of held this low. A 1.5 actually makes a lot of sense to me in this thought process. 1.5 is good. Okay, so I had projected stay the same or go a little higher. We actually drifted just a little teeny bit to a 5.25. Still a very bullish score. Still looks good. Yeah, there's no complaints about this. Now, as we go through and look at our watch list, let's just talk a little bit about covered calls. First things first with covered calls is this. There are two core covered call philosophies. Buy right, and I don't mean buy right like R-I-G-H-T, like that's the right decision. I mean buy right like W-R-I-T-E, buy it and write, like you're writing a message, because buy right is you buy the stock, you write the call, you're the seller of the call, the writer of the call. You're writing the contract, that's what the nomenclature is from. So a buy right would be you do it all at once. Versus you buy the stock, you own it for a little while, and then all of a sudden you're like, hey, that stock seems to be at resistance. I think I'm going to leg in because it's two legs. Buy the stock, leg one. Sell the call, leg two. If you do them at the same time, it's a buy right. You buy it, you ride it, you're in it all at once. If you own the stock, then later sell the call, then you leg in. Now, if you started with a buy right and then you do a roll, which I believe Melody is here. I believe she started with a buy right and then is doing rolls now. Great. Another way to start a buy right would be a naked put or a cash secured put, where instead of buying the stock and selling the call all at once, you just sell the put. Same basic thought process. Less margin, less tied up capital. But let's if you look at what makes sense and why, one of the core characteristics that we need to take into consideration is implied volatility. How much premium are we going to get for selling covered calls? If the implied volatility is mid or high, you get more premium and it becomes more attractive. If the implied volatility is lower, like it is now, it loses some sense of appeal. Now, you would still want to go through on an individual stock basis, because even if the implied volatility of the overall market is a little bit lower, is there still something for me in the strategy to make it a little bit more of a conservative, I don't have as much to do? Yes. Right? Now, if you do a covered call and the stock just takes off like a rocket ship, that's not good. I mean, it's not bad. It's just not good because you don't get it. When you do a covered call, you put a cap on. So if you're very bullish, this is not the strategy. If you're very bullish, buy the stock, buy the call. Make your money. If you're somewhat bullish, right? Neutral to bullish, this strategy does great, because if the stock goes sideways, you still make money from time decay. If the stock goes up a little bit, you still do fine. If the stock goes up a lot, you're just like, oh, well, I don't get it, right? I'm trying to think if I can remember what covered call you have. Rocket Lab? No. Cisco? Uber. I wasn't even close. Holy crap. Close. Just a bit outside. Okay. Doing okay. It's doing fine, because it has the, like, if at this point her basis is probably down closer to 90. And she has a 96. So if it gets back above 96, and she has 2 weeks, if it gets back above 90, so if all of a sudden Uber takes off and goes to 105, is Melody like, yes, 105? No. If it gets above 106, or if it gets above 96, she doesn't get anything else. Right? If it goes to 96.50, she's like, ooh, I could maybe buy my calls back for 50 cents and then sell the 98s. And then I roll and I make more money. That's feasible. But if it makes a big move up, is in a covered call, you don't get it. And so that's the thing about it. I love what Steven said. He says he has an 85% success rate with covered calls. Yeah, your probability of success is much, much higher. It's just a nice, steady strategy. So I'm a big fan. I love naked or cash secured puts as a starting point. I love covered calls. I love being able to roll. I don't do a lot of rolls, but I will roll covered calls. Just roll it up, roll it out. So anyways, hopefully that was helpful, but I'm open to having another conversation of covered calls on Tuesday in the evening during a working session. Let's get to our watch list. Apple, we're in a little bit of a pause, still overall bullish. Let's see what Apple can do. Still have some of Apple. Apple's on our list, though. I'm going to make my list for this week. Apple's on it. Archer Daniels is setting up for a trade right here. A little bit of defensiveness to this one. I like the way that looks and feels. Amazon, kind of iffy here, right? I'm gonna leave it off the list. APH failed to materialize. Now you may still be in this because it didn't break support, but you can see it's try. Oh, and then it just sort of gave up. So if you closed, I get it. If you held, same thing. Be ready to be done with it. If it doesn't start to move, you really don't have much time left for what you thought was going to happen on this trade anyways. And you'll notice now this trend that we had has really started to kind of lose its gusto. So be careful. I'm going to leave that off the list for this week. AXP, bullish, but needs a pullback. That could happen. I'll put it on. BAC, same thing. Financials is showing some strength, and that's good. BTI, that's another defensive. That actually was kind of lined up. The stochastics pinched, but did it turn? Let's see. We were at a 19.44. Yeah, I mean, it had a very slight turn of that green line as it pinched together. Starting to turn up. So that could be one. That looks reasonable. Beyond, iffy. Citigroup. Citi looks like it could still be intact. Could also have a small pullback. Caterpillar didn't make a new high. Now it's pulling back. I'm going to leave it off. CCJ looks all right. CELH. That would have been a tough one to trade into. This gap up 5.5%. If I was in a little stronger market, I might have thought about doing an anticipatory. Yeah, but not quite yet. CLS was looking good, and then a harsh and big turn, lost 8%. Capital One still looks pretty good overall. Coinbase, no. Cisco, not yet for me. Delta, DoorDash, no. Diamonds, Dollar Tree, no. Earnings coming up. EA's looking lackluster. A lot of things starting to kind of ease up on what looked like they were going to be some breakouts. Now it's like, I don't know. I still think EXPE looks pretty good. Ford actually is on a consolidation and starting to show some trend. I like that. Futu, yes. Very nice. Very good momentum on a little bit of a pause. GE, a little overextended. GE Vernova, rolling over. Not much there. Gold looks pretty strong all of a sudden. I think Google still looks good. And that one's maintaining its current trajectory. I would imagine if you traded that, you're still in that. Goldman. I actually like Goldman. I think Goldman's one of the stronger holding up out of the financial services. Hasbro, no. Hood, no. Howmet, no. IBM, no. Intel's kind of chopping around in this big triangle type pattern. IWM. Joby, no. KKR, no. Levi, a bit overextended. LITE looks real nice. A little overextended, but a flag could set this thing up. Last time the consolidation was 1, 2, 3, 4, 5 days, and then you got your answer. So it might not this week, but it could go pretty quickly and then all of a sudden start to turn. Las Vegas Sands, last time it took 1, 2, 3 days to consolidate, and then it was ready to go again. So I'm going to put that on the list. Meta, I think Google, if anything. Morgan Stanley, I would say you're in it. Still looks pretty strong. I'll put it on the list because of its strength, but it's not really a buyable thing now. Microsoft is a no for me. Micron is a no for me. Netflix is a no for me. Northrop Grumman, I would consider. NOC, Nvidia is a no. PGY, yes, but overextended. Palantir, no, not yet. QQQ, you can see the struggles starting to show up in there. Roblox, meh. Reddit's trying. Tisco, TSCO, is that Tractor Supply Company? I'll take a look at that. I shopped there for the first time ever a little while ago. It's a little update. The garden flamethrower that I bought came out of China, was a total piece of crap. I had to fight to be like, nah, I'm not paying for this thing. It doesn't even work. And then I went to Tractor Supply and they had a way nicer one for the same price. And I'm like, oh, I'm just going to buy this. So I do have my flamethrower. It did work. I got to trim a little first. trim it down to the tops, and then I can burn them. It's been a project. I'll give you some updates. Reddit still looks pretty good, though, actually, I think. If it can survive this volatility. Rocket Lab's doing all right. Moved off this consolidation. Made this move up. It's sitting here. It gives me that. All is ready. Let's do it. I'm okay with it. Anybody still have a piece of that? Silver is looking quite strong. SoFi looks a bit overextended, but still pretty bullish. I'm going to add it to the list. SPY looks fine. TME, not good. Not good. TME owes me some money. Tesla, down. TSM, no. Uber, looks fine. Pulling back a little bit off of highs. UUP, sideways. Visa, not yet. Walmart, no. The new Walmart's great. It was pretty funny. I went the first day, but late in the day, and every single aisle was like, all the labels were facing the right way, and you're like, oh, it looks so pristine. I went the next day just to pick up something, and I'm like, yeah, that didn't last but one day. Okay. I'm a little over, so let me just real quickly pop into our trading plan, and let's roll back up to the top because we are starting back over with section 1. Personal info. This is the executive summary of your trading like it's a business more than a metaphor, but an actual mindset. This is the executive summary. Who's driving the ship? And yes, Sandy, my wife, had the same reaction to you. Scott with the flamethrower, be careful. Strengths and weaknesses, important because we want to anchor to our strengths and then we want to set goals to fix our weaknesses. The rest of this is about commitment and motivation and what it is we're trying to accomplish. It's all very important stuff. I would highly recommend you spend some time in here. If you're like, I'm not really sure what to start with, then go pull up the trading plan sample and just start with something similar to what you see in there. That might be like where do you say, oh, I see. What's the difference between mission and vision? Mission is like a business. What are the goals and the objectives and the manner in which you'll carry yourself in your trading business, whereas vision is your motivation. Trading, if done right, should change your life eventually. Maybe not quite the beginning, but that's what it has the potential to do, to retire sooner, retire better, to get to like whatever it may be. If you achieve that, what does your life look like? Make that colorful and exciting, because when things get hard, you have to remind yourself, why am I doing this? What am I here for? What am I going to do when I have the ability to successfully navigate the markets? I think it's important. Give me an hour during the course of the week. 1 hour session, 2 half-hour sessions, 3 20-minute sessions. Give me that. Put that plan in place. You'll be glad you did. Okay, don't forget, Monday, nothing. Tomorrow is Labor Day. Enjoy the fruits of your labor. Netflix American Primeval about Utah early days. Interesting. Yeah, I don't even think they give all the stories. There were some things going on here in Utah back in the day. Yeah. Thanks, guys. It's good to see everybody. Enjoy the rest of your day. Enjoy tomorrow. I'll see you Thursday morning. As always, happy trading.